Welcome to Tax Insights, presented by Hawkins Ash CPAs.
Good morning, listeners, and welcome back to Tax Insight here on WOMT, 1240 AM and 107.9 FM. Jeff, good morning, sir.
Good morning, Terry.
Today on the program, we're talking about the self-employment tax.
Yes, because, we've talked on and off about the gig economy, where a number of people have second jobs, or, sometimes it's their main job operating their own businesses. It could be Etsy, Uber, Eat Street, or any one of those kind of businesses that we used to call side jobs. Some people have done these side jobs for years, and some are just starting them this year. And so when we talk to these individuals at the end of the year, some of them are surprised at the additional taxes that they have to pay when it comes to this income.
So let's start off right there, because you're right. There are some people that are surprised by some of these additional taxes.
Right, because as most of us know, as an employee, we have federal and state withholding taken off of our paychecks, but there's also Social Security and Medicare tax. And this Social Security tax, which is like 6.2%, and Medicare is 1.45%, so that's an extra 7.65% that comes off of our payroll every single time we get paid. Well, if you run your own business, you have to pay what's called the self-employment tax, which is similar to Social Security and Medicare.
So tell us more about this self-employment tax.
Yeah, it's essentially Social Security and Medicare tax that we pay as an employee, but what some people don't know is that their employer also pays that same additional amount of Social Security and Medicare, just like we do as an employee. So for a self-employed person, you're the employee and the employer, so you have to pay both parts. So the Social Security and Medicare is actually not the 7.65 you pay as an employee, but it's that times 2, or 15.3% is what a self-employed person has to pay on their business income.
Jeff, I guess I didn't realize that was that much of that. I did not know that.
Yeah, so let's say that someone was in a lower tax bracket, and so their income tax rate is 12%. This would mean that on the net income of their business, they would pay the 12% income tax rate plus a 15.3% self-employment rate. So it's like 27%, which equals about $2,700 for every $10,000 of net profits from the business. So it can add up quickly.
Is there a limit on how much self-employment tax is paid, like there is for an employee?
Yeah, there is. So the Social Security portion of that, which is like the 6.2%, that maximum is $142,800 for this year. But there's no max on the Medicare portion. So you are always going to pay some self-employment tax, but maybe not as much as your income goes up.
So who pays the self-employment tax?
It's anyone that has income from a small business, whether that's reported on their personal return, maybe what we call a Schedule C, maybe it's a Schedule F for those that have farms, and definitely partners in partnerships. At least at this point, though, if you're the owner of a corporation, either a S corporation or a C corporation, they get paid W-2 wages. So there's no self-employment tax. But there is talk in Washington about making self-employment tax on the S corporation income.
Jeff, great information each and every week. Final question here on today's program. How can someone reduce the amount of income or self-employment tax paid?
As always, increasing business expenses. Now, we've talked about this before, but one of the things that small business owners aren't the best at is really keeping track of all of their cash outflows. So, keep track of all your expenses. I think, especially in the gig economy, business owners don't keep very, very good track of their expenses. So some of these deductible items don't get taken. So that's definitely a way to reduce your income, is to make sure you're really diligent on keeping track of those expenses. The other nice thing that a small business owner can do is they can contribute to a retirement plan that's based on their business income. Now, this will save you only income tax and not the self-employment tax, but it does allow you to put money away for the future and save income tax from using your business income.
Jeff, again, great information every week here on Tax Insight with Hawkins Ash. How do listeners connect with you and the team at Hawkins Ash?
I would go to our website, which is hawkinsash.cpa. Follow us on Twitter or like us on Facebook.
And we'll talk to you next week here on WOMT.
This has been Tax Insights, presented by Hawkins Ash CPAs. Learn more online at hawkinsashcpas.com. Hawkins Ash CPAs. Part of your business, part of your life.